Okay, so let's talk about a few numbers, right? So at the India ecosystem, which has over 1,500 GCCs now, we analyzed over 1,200 of these GCCs with a headcount presence of more than 100. And we found that over 400 of these MNCs have some form of finance shared services, which is spread across 440 different centers. That is, a few of these MNCs also have a multi-center setup in India. Now, this is only second to IT offshoring in terms of the scale of presence as well as the maturity of the function itself. Now, talking about these 400 plus F&A shared service centers that are present in India, two-thirds of these finance teams are located within a multifunction or a GBS setup. The rest of them sit within the GCC itself. The presence of these centers largely replicates the GCC setup, which with Bangalore and Delhi having the highest concentration in terms of the set number of centers. Now, most of these MNCs are headquartered in the US, with 65% of these MNCs having headquarters within US or Canada, that is Americas. 32% of them are largely headquartered in Europe as well as in the Middle East, and 3% headquartered in the APAC regions, which includes Japan as well as Australia and Korea. Nearly 70,000 talent is currently employed full-time within the finance shared services of these GCCs. Now, talking about the talent, over 50% of this talent has an average experience of more than 10 years. If I talk about the overall team size within finance shared services, most of the finance shared services teams in India are either in the early hundreds or in the mid hundreds in terms of team size. We also have a few exceptions in place. So, for example, Vodafone, which is where India is a global hub for their finance shared services, as well as Oracle, we see the overall finance headcount in India is more than 1,000. Also, certain banks like HSBC and Citibank also have a large finance presence in the India ecosystem. If you look at the presence of this talent by the different industry verticals or the different segments of GCCs, more than half of this 60 to 70,000 talent resides within the software and the BFSI space. Now, this can also be corroborated by looking at the share of software and internet as well as BFSI GCCs within the 400 identified finance shared services MNCs. Nearly half of them are part of these two segments. Another interesting thing over here that we did was we looked at the level of penetration in the industry. Now, when I talk about level of penetration, the way we calculated this was we looked at the total number of GCCs within that industry segment that have a presence of finance shared services upon the total number of GCCs in that segment itself. Now, clearly, BFSI and pharmaceutical have the highest level of penetration, followed by FMCG companies. Now, this is also to the nature of the business itself, as well as the high operational requirement in these industry segments. While it is fairly evident in the graph that you see on the right-hand side that Bangalore is one of the key choices in terms of the location of these centers, we also identify Delhi and NCR as being the second location, followed by Mumbai for BFSI and pharma organizations. Apart from that, apart from just looking at these top 6 cities, we also looked at the tier 2 cities in India. These tier 2 cities also house around 5% of that 60 to 70,000 finance shared services installed talent. Now, talking about the tier 2 cities itself, these centers in tier 2 cities are largely involved in transaction processing tasks. For example, if I have to talk, let's talk about Schneider Electric, right? So Schneider Electric has an accounts payable team based out of Chandigarh. Similarly, if I look at Deutsche Bank's Jaipur center, the accounting and internal reporting team sit out of Jaipur, as well as the entire vendor management office sits out of the Jaipur branch. Now, interestingly, within these tier 2 cities, 80% of the centers that are present in these cities follow a single center strategy. That is, these centers in tier 2 cities act as a global hub for transactional processing for that organization. Along with that, another interesting fact is that a lot of the talent, majority of the talent that resides within these tier two cities are have a relatively lower experience, with many of them being fresh graduates that are employed for transactional processing in these centers. Now, talking about the fresh talent, we also ran an analysis on the fresh talent pool that is suitable to work in MNCs. Now, India is known as for a vast pool of fresh talent. We ran quick numbers basis government data. There are nearly 5 million young graduates that enter into the undergraduation or PG courses in India. What we did over here is we took that 5 million across the different institutes by ranking and looked at the suitability of young graduates who are ready to work in an MNC environment. We applied two filters here. First is the filter of relevant study streams that is applicable for finance shared services. The second filter was the suitability to work in a global environment in an MNC. And basis that, we identified nearly 310,000 graduates per year that are suitable and ready to be employed in a MNC organization. This is also augmented by the fact that India is one of the locations which has a very high number of global certificate talent, which is globally certified. So we looked at some of the most, so we looked at some of the certifications which are the most scouted for, such as CPA, CMA, as well as CIMA. Now, India has a fresh talent pool of around 3,000 to 4,000 talent, which undergoes or takes these certification or these courses every year. And in terms of CPA, India is one of the top three countries in terms of the number of candidates appearing for these certifications. This gives us an overall picture of the India landscape in terms of the feasibility and why India is usually preferred as a destination when setting up a global finance shared services hub. Now, when you're talking about globalization of portfolios, right? Um, while ecosystem is a good indicator for globalization, it is also important for organizations to determine the feasibility through the lenses of dependency as well as readiness. Now, talking about looking globalization, we at Zinnov have helped many organizations in their portfolio globalization strategy. And we do this using our three lens framework. In this framework, the first lens looks at the transition feasibility of the process. Let me spend a couple of minutes just talking about how this framework works, right? So in the first lens, we look at the feasibility of transition for that process, where the first thing we look at is the strategic dependency. That is the dependency of that process on the headquarter or on the owner. The second thing we look at the impact the process will have on the customer. The third thing is in terms of how complex is the decision making for that process and the stability of the process itself, the tenure of the process. The last thing we look here is in terms of the regulatory obligations or internal policies that govern or may affect the transition of the process. The second lens looks at the internal readiness, that is the offshore center or the GCC slash or GBS that you may be looking to transition to. Is that center ready to take in the process or not? So we look at the domain knowledge as well as the tools that are required, the presence of tools in the center. We also look at certain dependencies that may affect the process, such as geography, language, as well as time zone. We also look at the knowledge transfer mechanisms. Are there any defined mechanisms or SOPs in place that can help in the feasibility or in the ease of transition? And last but not the least is the scope of automation. Because automation may also define how you would want to transition the process and may result in cutting down the cost of transition by a very fair margin. Lastly, we look at the third lens, which is ecosystem attractiveness. This lens covers availability of talent in that ecosystem, presence of peers in the ecosystem, as well as operating cost, or if there are any regulatory concerns that govern the transition or the ease of transition for a process. Now, each process is then mapped on a 2x2 matrix that helps determine the feasibility of globalization, as well as identify the dead zones if there are any. Now, what we've done here is to give you an illustrative of how that looks like. This may or may not be an accurate representation basis your organization's requirement. What we did was we utilized this framework and we tried to apply it at the overall ecosystem to see how does the entire value chain for finance look like. Um, so basis that, we identified that over 45% of the value chain for finance has a very high globalization capability or propensity to globalize. Around 39% has a medium propensity to globalize, slightly more strategic tasks, whereas 16% of the value chain has a very low propensity and may not be feasible to bring to a financial services. This itself proves, a massive case for financial services to be globalized across different locations. We also looked at the different locations that are being serviced from the India financial services hubs. So we divided into three major zones, that is Americas, Europe, Middle East, and Africa, as well as APAC, which includes Japan, China, as well as the ANZ region. Now, 32% of the GCCs or financial services hub in India are servicing the Americas region. Nearly 31% are servicing EMEA region, which is largely Europe and Middle East, and a little bit of support for Africa. And 43% of these centers are supporting the APAC region. While if I look at the workloads, most of these workloads are supported from India, but procure to pay and accounting typically have the highest workloads. Now, we discussed everything about the ecosystem, we discussed about globalization, but let's talk about the future of the finance function, right? So, how does the finance function evolve into the future? What are the things that leaders need to look at when, as they look at the future of financial services? Now, usually when you talk about finance functions, they're one of the most mature within a GBS setup. And when you talk about digitization, they are one of the early adopters in the digitalization journey. Usage of tools has also become very predominant. So what we did here was we picked up a financial analyst workload. We looked at the different areas that a financial analyst has to work upon, as well as the skill sets required for it, and how does that change, right? So let me take an example here. Let's talk about financial trends and analysis. Typically, this involves analysis of financial statements, expense budgeting, identifying profitability ratios, as well as variance analysis and reporting. Traditionally, these things used to happen over an Excel spreadsheet. But over time, now nobody uses an Excel anymore. You have tools such as Fathom, SAS, as well as ClickView, which helps in making the process much more efficient, as well as improves in the quality of the delivery itself. Similarly, for financial forecasting, also which requires creating financial models, providing decision support across different areas such as expenses, headcounts, P&L, balance sheet. Again, which was erstwhile done on an Excel spreadsheet, now utilizes Python coding, ML, utilizes analytics tools such as Profix or IBM Analytics. You can clearly see how the need for talent has now evolved from not just knowing basic finance or understanding basic finance, but also be digitally enabled or be digitally ready for the new age finance function. To aid into this assessment, what we also did was we looked at the digitization of use cases across the entire finance value chain. So what you see over here is across the different portfolios of finance and accounting, we assess the scope of digitization. Now, the scope of digitization is calculated by the amount of impact reflected in the process due to the presence of a digital use case or digital applications. Now, clearly, the higher the impact, the higher is the scope of digitization. As you can clearly see, most of the portfolios within finance and accounting value chain have a very high scope for digitalization, with a few examples called out, or leading digital use cases that we've observed in GCCs called out here on the right-hand side. Instead of going into these details, let me just take a quick example. So I'll run a case study for automation. This was implemented by ABB's accounts payable team. So earlier, ABB's accounts payable team had a manual invoice processing. They were still using paper for their manual processing work. Which meant that average processing time per invoice was around 12 minutes. It cost around $12 to process an invoice. there was an error rate of more than 2%. And on top of that, these invoices, there was a high chances of duplication of these invoices as well as duplication of payments because it was all paper-based manual data entry. This also, because this was manual data entry, this also involved increase in the entire approval time, because to identify the right approvers would take up a lot of time for the team, which led to delay in payments as well as paying late payment charges. Now, what ABB did was they adopted an automation tool, which was implemented across the entire purchase to pay cycle. That includes scanning, extracting, interpreting, filing, and payment approval. Now, post implementation of that tool, um, of course, there was a reduction in the entire overall processing time, a reduction of around 80%. The processing cost also went down by around 59%, and it reduced the invoice processing errors by 99%. Because the duplication of invoices was also something that was eliminated, and because of that, there was also a decrease in the invoice approval time by around 63%, where AI would be immediately routing those invoices to the right approver. What the outcome of this was, now the ABB's accounts payable team was making early payments instead of paying late due charges, right? And because of these early payments, they were also getting early payment discounts. This eventually, the combined effect of all of this was a cost saving of approximately 55 million US dollars, as well as it also increased the productivity of the accounts payable team by around 40%. That is the difference that you get to see when adopting digital technologies or automation in your finance processes. Right. So lastly, as the maturity of finance function leaps forward, the role of the finance leader is also going to evolve and will become more cross-functional going forward. Now, erstwhile, what leaders used to focus on in terms of leading specific finance processes will now become driving end-to-end process reporting for the entire CFO group, which will also include our own risk management, compliance assessment, as well as driving innovation for the finance function from the shared services or GBS centers. Erstwhile, what used to be KPIs specific to operational efficiency or performance metrics by each process or function will now become KPIs or more strategic KPIs, which will look at long-term value creation for the entire finance function itself. Earlier, leaders used to typically work as business partners for different finance groups, help them in specific processes. Will now become strategic partners to each of these finance groups, which will involve not just helping in offshoring or removing the transactional tasks from these finance functions, but also get involved in strategic planning as well as innovation at a functional level. Erstwhile, most of these leaders would typically work or help leadership with the right data, with the right expertise when it comes to data analysis for the finance function. We see the modern and in the modern finance world, in the modern world of GBS, these leaders will be more involved with increased responsibilities in the area of investor relations as well as board engagements, and all of these will govern by their cross-functional nature of working at standardization as well as digitization across the three perspectives of people, process, and technology. That's how the entire role for a leader is also going to evolve as we see the evolution in the finance shared services function. That's it from my end.